Hi, and welcome to the Stockscores Market Minutes for November 2nd, 2015. This week, put the odds in your favor is our topic. Don't fight the trend is your friend. These are things that any trader has heard a multitude of times. The concept there is that you want to trade with the general trend of the market, but what I like to do is I still like to buy weakness in a longer term upward trend. So if the stock has been going up for months and then it comes down for a week or two, then I look for the break of that pullback in favor of the longer term trend as a sign to get in. We can also do that in the opposite way. If a stock is in a longer term downward trend and gets a little bit of strength and then starts to roll over again, we can short that market in favor of the longer term downward trend. We want to let the longer term trend tell you what to do and the shorter term trend tell you when to do it. Here's a chart of Facebook, 3-year chart of Facebook going back 3 years. And you can see at the blue arrows, I have all the instances where the short-term counter trend was broken. So there we have a counter trend from, say, December of 2012 until the middle of 2013. That was broken around the third week of July, and we had a nice upward move. Then we had a pullback, went below the 8-period moving average. This is a weekly chart, crossed above it. Good signal to buy. That went for a pretty good run. Then again, we went below the 8-period moving average, broke above it in favor of the longer term trend. You can see it happens over and over again. Pullbacks from highs that result in a break of the pullback typically resume their longer term upward trend. So, and we can flip all this upside down for short selling. So keep that in mind. You can take this concept and apply it to day trading, swing trading, position trading, whatever you like. It's very simple. You're buying weakness in the longer term trend or shorting strength in a longer term downward trend. All right, let's get into this week's analysis. It was a real strong month this October. The buyers basically took out all of the losses that happened in August and September. And that continued this week. We had more strength, although I would say the strength was certainly less enthusiastic in the last week. And in fact, on Friday, we saw some selling at the end of the day that makes me think we could break the upward trend line that I have drawn here. So again, this is a 30-day chart. It's a short-term chart, intraday chart. And notice right at the end of the day on Friday, on the very right-hand side of our chart here, we had a pretty good downward move, and that is now taking the market right to its upward trend line. So what we want to watch next week is whether this upward trend line on the intraday chart gets broken, because the market is due for some profit taking. Now the reason that that is important is because if the market were to roll over and move lower next week, we will have formed a falling top. Now it can't just go down a little bit next week. If it only goes down a slight amount, then it won't have broken this upward trend that's been in place for the last 5 or 6 weeks. If we get a strong downward move next week that breaks the upward trend, that will be a breakdown from a falling top. That's the thing that I warned you about back in here when the market was breaking down, because that would be a breakdown from a falling top and we could retest the lows at that upward trend line. Now this is all lots of maybes because we haven't rolled over and broken this short-term upward trend yet. But the signs that I saw on Friday indicate to me that that could happen. So we want to keep an eye on that. If on the other hand, the market continues its upward trend next week and the next couple of weeks and goes to the highs of, the spring or even August, then it will have negated the potential for a falling top and the bulls remain in control. So that's a real important thing to watch for in the next few weeks. Here is the Russell 2000, and it tried to break its downward trend this week. Early in the week it was making some headway and then it failed to do that. Closed this week still below that red downward trend line. So we still remain in that consolidation pattern. You can see that the small caps have basically been stuck for almost 2 years. The upward trend ended early 2014, maybe January, February 2014, and we've really just been sideways since then. We had a little bit of a rally in early 2015, but have given it all back, and we're really now on this index back where we were in 2014. For this to reverse, we need that downward trend line broken, the one I've drawn in red, so that's what you want to watch for. But it makes it a tough alpha trading environment, tough to trade individual stocks because there's just no desire to buy stories. What people are buying is dividends, they're buying large cap safety, and they're not too interested in the small caps right now. All right, TSX had been stuck in the sideways range for some time, but on Friday the market really got hammered. Moved lower. The banks were kind of the culprit, along with Valiant, which has a heavy weighting in the TSX index. This is a bit deceptive because when you go around the market in Canada, it doesn't look this bad. The energy stocks are stabilizing, mining is stabilizing. It was kind of an odd thing on Friday where the banks really got beat up, and that's why this index got beat up, because they have such a heavy weighting in the index. So I don't think it's something to be too concerned about if you are invested in general areas of the market in Canada, but certainly if you're buying the index because the banks carry such a heavy weight in the index, you want to be cautious. There's the longer term chart. You can see that the downward trend line on the 3-year chart has held up. I think in the last couple of weeks I said we might break that trend. We certainly threatened it, but we did not break it. And so we're back in the bearish camp in terms of the long-term outlook. The longer-term trend in Canada remains down. TSX Venture, which is a small cap, is a critical patient, but it is stable. And you can see the stability in the last 2 months of sideways trading, but the longer-term trend is still very negative. You can see the Stockscores indicators down below 50, and they have been for some time. If we are going to get anywhere in this market, we need to break through that red line of resistance. That would potentially be a break from a rising bottom, which would be a positive. So that's kind of what you want to watch for on this market. But I still think you got to be pretty cautious and very selective with the small cap Canadian stocks. TLT Treasuries broke the downward trend in September. Been going sideways since then, building a little pennant pattern. We want to watch for a break of the pennant. Breaks up, that means interest rates going lower. Breaks down, that means interest rates going higher. The news would indicate to us that interest rates should go higher, which means we should see a break down out of this pattern, a resumption of the longer term downward trend that began early in 2015 as investors started to believe that the Fed was going to raise rates. Hasn't really happened yet. Certainly the Fed hasn't raised rates yet, but the market hasn't really priced that in yet. But we're getting there. We're slowly getting there. US dollar broke the downward trend line 2 weeks ago. Didn't really follow through with that this week. At one point in the week it looked like it might, but US dollar still trying to gather that upward momentum that it enjoyed in the middle of 2014 until the spring of 2015. We remain locked in that downward sloping flag pattern that's been underway for most of the spring and summer into the fall. Good chart to keep an eye on though, because if that break from 2 weeks ago resumes and we start to move up through 25.5 on the UUP, that would be somewhat harmful for the commodity stocks and commodities in general. Speaking of commodities, here's gold rolled over, downward trend stays intact. I've been bearish on gold for a long time. Certainly you can trade it in and out in the span of a couple of weeks because it does make these little pops and the gold stocks will pop along with them. But if you're a longer term holder of gold stocks, there's really no reason to be holding here because the longer term trend remains down. Oil, another critical patient, but stable for the last roughly 2 months and trying to move higher. It broke a little bit higher on Wednesday as it bounced off of support there on Tuesday. And that points to a retest of the highs from early in October. But I don't think it's a real strong move. Again, treat this as very short-term trades. You don't want to be a longer-term believer in oil just yet. I like to, nibble on these stocks when they break their downward trend because they often will go up 20-30% in a relatively short time period. But the case for a longer-term upward trend in the oil sector is really not there yet. So it's really just a trade for the more nimble traders among us. VXX, the fear index, stabilizing at the lows. Really the fear, I think, has been taken out of the market. But if that signal that we saw on Friday, that weakness right at the end of the day on Friday, causes the market to break the downward trend early next week, we should see the VIX spike higher here. So keep an eye on that. That could be a trade next week if we get that break of the upward trend on the intraday chart on the SPY. So my outlook, US stocks, neutral, long-term, bullish, short-term. Canadian stocks I've downgraded to bearish long-term. That downward trend line is held up. Neutral, short-term, it's in kind of a wishy-washy, choppy pattern, so we'll see if it bounces back a little bit next week. Gold, bearish on both time frames. Oil, neutral on both time frames. U.S. stocks continued to move higher this week, but they lacked the enthusiasm that they had. Watch for a break of the short-term upward trend. Canadian stocks are not doing as bad as the index, but they are still languishing. Gold remains in a downward trend. Oil struggling for stability. That has been the Stockscores Market Minutes for November 2nd, 2015. We've got a bunch of webinars coming up on Stockscores. Check out the Stockscores homepage for those. And as I always like to say, have a great week in the market and trade well.